day, everybody. It's Greg Schnell, and I am here with Market Roundup for April the 13th, 2019. Lots of things happening in the market as always, but this week we had a particularly big spark from JP Morgan. Kicked out the banks, and they all started to rally, so we're going to spend a little bit of time on that because that's a positive sign. Broker-dealers broke out. So that's helpful as well. They're usually an early indicator of bigger things. Commodities softened this week, and the Shanghai market actually finished down on the week. So we're going to go into the commodities, obviously, and then breadth continues to improve. So where 2 weeks ago we were stuck at a kind of a lower level, the recent surge we've got just suggests that we're going to be in this bull market for a while longer, and that's good. I think it's still hard to add right here. I think you need some sort of a little pullback to buy into, and the global markets for the most part pushed higher. I'll just show you those charts, but I'll call it the main markets in Europe were higher, and then U.S. industrials are just sitting here looking like they're trying to break out. So talk about that as well. First things first, we're going to start on the commodity segment today. We've got a nice little push going on over here with the commodities actually moving back above the 10-month moving average for the first time. That's oil, obviously, pushing up higher. We're still not back to the October levels, but we're doing okay. We're trying to get going here. And I think the real question again comes back to which way this US dollar wants to go. It's been about a year that we've traded in a very tight 2-cent range. So that continues to trap the commodities. So looking at the CRB, these nice green candles were right up at the top of the Bollinger Band, so it wouldn't be a surprise to see a pullback here. But, it's not uncommon for them to ride the top of the Bollingers for a while here. I think the real question is the oil markets. And they tried to rally on Friday as well. So we've got some hope going on for a lot of these commodities. But if we go look at the DBC, it's just sitting here right at the 200-day moving average and pushed above on Wednesday, pulled back on Thursday, doji on Friday. So really didn't give us anything conclusive. It's unfortunately we have these two massive volume bars because it really wipes out any of the other volume information we might be able to glean here. So that's a bigger issue. West Texas crude, again, pointing skyward, continues to soar nicely. Natural gas is sitting right here. We'll keep watching natural gas. Again, it likes to trade opposite to the S&P. It doesn't always trade opposite to the S&P, but you can see as the S&P broke down, this broke out. And so anyway, a lot of people will play it because it's not correlated, and at this point it's sitting right on support, so it's an interesting place to watch. Looking at heating oil, this was a pushback above over the last couple of weeks, so that's bullish, and it made a higher high here. So all of these energy trades are bullish. They keep shooting up. Corn is trying to get back inside its trading range, right up against the 40-week moving average. And then we look at the soybeans, and they're tilted down a little bit with a declining moving average 50-day or 10-week. And wheat is just hovering around this huge 2-year base. Looking at gold. Gold is trying to find support at this 1300 level, 1290 level in there. So my charts have gone bearish, and they're really difficult is the right answer in terms of which way you want to go, and we'll get into why. But breadth still sits at around 45% even as we try to line up this breakout. So some of the gold charts themselves are okay, but lots of the gold charts, and especially the gold winners, have been starting to break down. Silver had another bad week and continued to drop lower. So if I was to pick a side to go on, I think with very little conviction, I'd be short, not long. But that doesn't necessarily. I just think it's indecisive right here because we haven't officially broken down. But a lot of the indicators I like to look at are starting to fail. So, copper here is trying to break out to the upside, had an up week. Copper miners were okay. This is the one that surprised me to see aluminum break down really hard. That's a major industrial metal, and that's a bigger deal. So, really need to see that kind of thing improve and actually stop. Sorry, I'm just fixing one thing in the background here so we don't get these alarms. Um, I need the industrial metals to break out. I really do. And the concern I have here is they all had a rough week. And if we just go look at what does a rough week mean in industrial metals, well, here's what the steel ETF did, down 3%. The silver miners were down 3. Aluminum was down 3%. That's the actual aluminum. Nickel was down quite a bit. Rare earth metals, which recently started to turn up and look good, paused again, so it's kind of 1 week up, 1 week down. And lithium, same thing. All of these very frustrating to watch. And then up here on the top, basically all of the oil related stuff or crude related stuff was higher, and and copper was higher, but copper miners, I think is this chart here. If we just switch to a weekly view, they were marginally higher. Um, so what is it? I guess they were up 1%. Uh, what surprises me is I really don't like where this is rolling over. That's the problem I have. This feels like this to me. And so I'm in this grumpy mood where things are just hovering around their 200-day moving average. Their momentum curves are sitting right around zero, and yet they're pointing higher, so it makes us want to try and get involved. Livestock. This chart's been doing great and hit higher highs this week, so that's a little bit better. Here's sugar, and it finally got above its 10-week moving average here after a couple of months down below. But you can see this big downtrending line finally trying to break through the upside again. You can see there's going to be 3 peaks here that line up. The bottom line is we're in this sideways congestion zone, but this big long trend looks to me like it's at least weakening, and we're starting to try and find an upside. Coffee, on the other hand, can't get going. Cocoa, nice push to the upside, but still in a trading range, really top end of the range. Cotton bouncing a little bit, but nothing really to look at. Marijuana names had a tough week. They were down 4%. On Friday, there was news that Canopy Growth was going to be added to the TSX in Canada. And so with that addition, maybe we'll see some price action on Monday. But the chart's pretty bearish. We're rolling over below the 10-week moving average. Full stochastic is declining. Relative strength is dropping. And the scooter ranking is telling us that this is behaving weaker than most of the market. We're down in the 18%. So compared to the rest of the Canadian stock market, this ETF is getting very weak. So considering the euphoric news around it, it doesn't seem to be doing much. Anyway, coal and silver. So here is, sorry, and steel. Here is steel, and it's grinding sideways, coal grinding sideways, and steel has this little uptrend going again, a breakout last week, and then this week a pullback. Now maybe it's a bounce off the trend line and we start to get going here, but it was pretty weak, down 3%. And here's lithium, and again, rolling over just after coming through this downtrend line and breaking above the 10-week and starting to look bullish. First thing it does is ticks back. Steel, same thing, rare earth metals rolling over. And you can see a gentle sloping uptrend here. If that starts to break, that tells me there's problems in China. So I'm watching these two charts quite intently. China didn't have a great week this week as a country. The Shanghai was down, made a higher high, higher low, but closed near the bottom end of the range. Okay, energy. Again, the pushing above the 40-week moving average, so that should be bullish, and everything is heading higher. Crude is right up against horizontal resistance, and I'll show you that in a little bit. So it's hard hard to add here. And again, this PPO is right near zero, so I'm cautious again. But everything else is trying to break out into a new bull market, so very uncomfortable here. Here's the RSI, and got all the way to oversold, and now it's up to 60. Typically in a bear market or a sideways market, we just see it stall up around this 60 level. Recently we got up here, so that was bullish, and now we're back down. Once we touch this 30 level, we'd call that a bear market indicator, and now we expect it to stall out about now. So I'm having trouble getting more positive on it. Precious metals, again, trying to get going. We did get a new bull market signal here, so maybe we just pull back and we finally get going. I will note that I like this. This is coming back after breaking out, coming back to zero, and if it could just get going at zero, that would be exactly the kind of signal change that we'd want. So first of all, it's made a higher PPO wave, comes down and then starts to turn higher, and that probably could get us going. Anyway, I don't see that yet, so waiting for that rather than trading that. Here's agriculture, just grinding sideways, and the DBA a couple weeks ago had a nice surge and it just gave it all back. So that was uncomfortable. Here's livestock, finally breaking out, just pushing higher. This is the same indicator, or the same chart, but I've got indicators on it this time, and you can see the relative strength isn't really breaking out compared to the S&P, but this RSI is finally getting going, and again, it got really close to another bear market indicator here, but it stayed positive, and so it's trying to make its way out of this base, and this is a 3-year base here, so that's pretty big. And we're starting to see this push here, and the PPO still continuing higher. I like it here. And the industrial metals, so again, trying to get above its 40-week moving average and just struggling here. We've got the bear market indicator stuck at 50. Really a mixed bag, and if it can start to get going and get some positive momentum, so let's just talk about that briefly. When your momentum indicator is above zero, that's bullish. When your momentum indicator is below zero, that's bearish. And when you're sitting right at zero, we're marginally above. But the histogram has been declining for 3 or 4 weeks, probably even 6 weeks. So starting to lose that upside momentum. Doesn't mean it's going to break down. It can do this. But what we want to watch for is this thing definitely needs to confirm that it's going to be able to break out to the upside. And again, we got this bear market indicator, so that's what makes me cautious. Okay, for all of the commodities, oil weighs heavy, right? So here's the big rally. We're right at the 60% level. We were stuck down in there for a long period of time. We got a bull market indicator, went almost a whole year, dipped down into a bear market indicator, and now we're sitting right at the 60 level. So if we just mark that on here, just go grab a line. Okay, and I hold down my command button, and that makes it horizontal, perfectly straight. On a PC, I think it would be the control button. So you can hold that down. Anyway, the bottom line is we're back in this bear market mode, and what we need to be careful of is getting right to the euphoric level, and then it rolls back over. So it doesn't mean it will happen, but definitely concerning. So here we had a second lower high on the PPO. Now we've come up and we're touching that line. Again, this is the place where I'd expect it to kind of stall or break down right at zero. We'll see if that happens. We're at 0.02 on a scale of -6 to 4. So very close to zero, doing nothing. And the real question is, does it roll over here? Because a rollover near zero is a pretty big negative indicator. Okay, let's just roll it out a little bit. And you can see we had this bear market in these commodities going back all the way into 2014. And if we just pop it open to 10 years, just to see how the RSI works, you can see that commodities in this particular indicator, 2011, right, that was the rare earth metals top and the gold top and the industrial metals top, all of those kind of things. And then oil fell out of bed in 2014. So you had this RSI high in early 2011, went down, gave you close to an indicator of a bear market, then rallied back up and stalled at 60. And again, that's this kind of picture. We're getting the same kind of picture now, so you just want to be cautious. Anyway, fell back down and then traded sideways for a couple of years in terms of the indicator and price. And then all of a sudden plummeted and we got into a deep bear market. And then as you fall down in here, so while you're rallying, again, you can have uptrends for 6 months, whatever. The big issue is you're still in this big bear market. And so what we want to figure out is, are we coming out of this big bear market? And I think that's a story that has yet to be written. We're trying to get that figured out. But again, here we are right at the 60 level, and if there was a place to have caution, that would be right about now. Okay, pushing on to the Baltic Dry Index, no real clues here, drilling near the bottom of the chart. So nothing I want to use as an investment indicator, that's for sure. Okay, here's XLE, and it continues to build out, I'll call it a wedge. So a wedge is a series of higher lows and a series of, in this case, I'd probably do it like this, and a series of higher highs, but the highs aren't pushing away, aren't pushing up as high as the lows are pushing up. So you end up with it dropping into a tighter range. And as it gets to this tighter range, then what you expect is it ends up making a crane sort of look. And a crane look would be, this is the kind of bracing on the crane and then the cable hangs down off the end. Well, you kind of end up getting that break of momentum. And when you get that off a wedge pattern, usually it's something to be respected. So at this point, we're still within the pattern. We had this is a weekly chart, and we had a big high push to start the week and then came back into the last 6 weeks range. So we've got 2 Pinocchio weeks here where they've stuck way out to the top and then pulled back in. I would just say cautious on energy here. It just seems a little too far and doesn't really seem to have the regular market push. So here's the refiners, and again, they were up 0.1%. So if oil was going to start getting ballistic, you'd expect these guys to. Gasoline's been improving in price. These guys have not been able to show anything here. So if oil pushes up and gasoline doesn't push up, this chart gets, refiners get squeezed. If gasoline pushes up while oil pushes up, everything's fine. Well, the price of heating oil is up, the price of gasoline is up, the price of West Texas crude is up, and this chart is flat. So not seeing anything going on here that makes me want to add more money to the positions. And you've got a big downtrend in relative strength here that I think is, pretty noteworthy. Basically, since the market broke in October, PPO is still below zero. So that still tells me economic demand is concerning, but again, the charts are going higher without oil, so hard to argue with that. Here is frac, and this one is the unconventional oil producers. And so shooting up nicely here, breaking out of a 5-month base right up against the 40-week moving average. Finally broke this downtrend on the PPO. So I would be bullish until you can't be on this thing. Maybe it just goes up to zero and rolls back over. I don't know. But I do like the breakout, and at least we finally had some push and we had some volume surge as well. Now, part of that news was the merger information out of not Apache, Anadarko. Early morning here. Anadarko kicking it up. So getting bought by Chevron. And so with that, Chevron pulled down, Anadarko shot up, and so that might change this chart a little bit, and especially the fact that it coincides with the date. Okay, so we've got frac here. basically the scooter ranking shows that we're out of favor, very out of favor, and we're jumping up to 10. 10 does not make the world change, but it's at least worth watching. And if there were some mergers and acquisitions, and it's going to start improving, then obviously we want to get on board. In this particular case, just watch to see if it's a one company thing or if we actually get a little wider blessing from this. So this is one of the reasons that we're concerned about the price of crude. Here's the West Texas chart, $64, right at the former support and resistance level. So what do we mean by support and resistance? When price always bounces off this, it's considered support. Once it breaks through, now we consider that line resistance. And so here we are sitting right at the $64 level, and we're really not getting until we get much above this. It's going to be very difficult. Now, it's hard to argue that crude's not going higher. I think the big issue, I just showed you that frac chart, and it was basically straight across with a little blip on the end, and that's much more concerning. In this particular case here, you see this start to move up, up, and away, and that was really nice to see. And again, where did it stall? Up around the $64, $65 level. So watch crude closely here. It doesn't seem like this is the place to add. Feels like we need a little bit of a pullback for people to start putting more money to work. This is quite a thrust from 42 to 65. Almost a 50% increase. And again, here's the exploration and production ETF, not so much. This has gone from 30 to 32, so about a 7% rise in the same period of time. Well, I guess there was the 25 to 30 very quickly, and then nothing for 3 months. So anyway, tough in here with the energy. I just don't have a comfortable feeling that there's more to run in the price of oil anytime or right now, especially with the way the refiners are behaving. So USO sitting here in the middle of the range, 16 to 9, and we're at 13, so a little in the upper half, but nothing really exciting. Okay, natural gas, again, I mentioned that natural gas can trade opposite the markets. And here in September, we saw this breakout, and then natural gas just shot up, pulled back. It was also seasonality. We're coming down into this low point here at around 250. We're at 270 right now. So watching this just to see if it bases here and starts to turn up. That might be an indication of people looking for something else to invest in. Just natural gas daily. Here's another chart that's interesting. So this is the natural gas ETF, and again, it tried to bounce out of this range on Friday's news, but we're below nat gas is below the moving average. The ratio is actually above, which is nice to see, and Cabot oil and gas is gently climbing out of this hole. But if you look, this is a new 52-week high for Cabot oil and gas. It doesn't look that exciting as it broke out. Price is just kind of holding here. We kind of wanted to do this, right? Just keep going. And anyway, it's worth watching. Put it on your watch list. If it pulls back a little and then starts to push up again, that's probably a better entry. Okay, nuclear-related power plants building this big expanding wedge, pulled up, came back down, and now looks like it wants to start turning back up again. Again, this is typically a utilities play. For the actual uranium producers, this chart keeps trying to break this down-sloping trend line and just wears everybody out. It's rolled back over again, and Cameco didn't follow this move higher, so that's another concern. So here's URA, big downtrend on a weekly chart. We've got this uptrend going on, which is comforting. PPO right at 0, so until you kind of start to get something better, that would I'd stay very cautious on this space. Copper. So here's the copper chart. Let's just zoom in on the last few weeks here. And again, working us sideways. We had this big bar last week that looked really good. And then what did it do? It closed at the bottom of the bar. This week it rallied. Couldn't make higher highs yet. So we're stuck right at this resistance level. Again, this goes back almost a year. So here's July 6th, we started to break down. And then, we're kind of stuck in this area. So I would not be too comfortable yet. I think I'm still waiting to see if the industrial metals can break out a little bit better. This is just copper on the weekly chart. So that other one was quite compressed. And what we see here is it looks like it wants to roll over at zero. That's a problem. So what we see back here, same sort of thing, just starting to break out to new 4-month highs, and then it rolls over. Well, we're stuck here for 6 weeks, so this consolidation is actually comforting. And if this is going to start to push higher, then we can all get on board. I think we need the direction of the US dollar to finally show its hand, and we haven't got that yet. So this is the copper chart for a copper tracking ETF. And again, this chop for the last, 2 weeks here is nothing helpful. Going back 2 months is nothing helpful. We have downsloping PPO from a very high level. So if this was going to start to turn higher, it would be this would be timely. So we're below zero, and then we go above zero, come down and get to the zero line, and then start to head higher. That's a great place to get on board. So we're watching for that setup to show up. Steel, this ETF just ticks me off because we basically got back to this red line, started to make it look like we were going to get going, and we didn't. Again, there's zero interest showing up in this chart. Like, nobody's buying this thing. The daily volume is 65,000 shares with the 30-day average at 100. So even with the breakout last week, we saw no push up in volume, couldn't even get above the average. Whereas back in November, December, back in here, volume was starting to increase up above this average, and the average was significantly higher. So this anemic level on steel just tells me be very, very cautious. And also looking at this right at zero, if this was going to roll over, that's textbook what we should expect. So as much as I wanted to be bullish last week, I am struggling because of this reversal and the place of the reversal. It's just hard because we're not getting a direction from the dollar. Okay, aluminum again broke down, so that one puzzles me a lot. If we're going to start getting everything going in China, then this thing should start to roar. And again, I think China made up 50% of the world's consumption of industrial metals or something like that. Like, it's a dramatic number. So we kind of need that market to kick it up. So here's the XME, the metals and mining ETF. And what do you see? It's back below its 50-day moving average, making a lower high, kind of continuing this big downtrend. It doesn't look like a place I want to get involved here. You're sitting right at the zero line. If this started to turn up, you'd look back and say, okay, it rode up, came back to zero, tested, and then took off. So, well, I don't want to get too negative on it. The chart currently doesn't look like the place I want to buy, but you've now got this narrowing triangle here, or pennant pattern, and if it starts to break to the upside, then we can start to add. XMA, this one has more gold in it, so it's had this uptrend going, but now we start to see new three-month lows here compared to relative strength to the U.S. market, and very close to new 5-month lows. So, when they're making new 5-month lows, that's not a place I want to get involved in the chart. So that would be a big concern for me. And you can see the scooter ranking never really got into the top performing area. We would expect to see that if these metals were going to start to rock. So here's gold itself. And gold, the full stochastic on a weekly kind of gave us a sell signal here a few weeks ago where it touched the line but didn't get through and rolled over. And now we had another week where we opened, tried to go higher, closed pretty much where we opened, and where we've been for the last 3 weeks. I think the real question here is if gold starts to let go, this is where it would let go from. I'll call it you're at the last ledge of support. If you're Wile E. Coyote, you're really hoping that you turn around and walk away from the cliff. And if not, a move down to whatever, let's just pick the moving average here at 1250 as a concern. We do like the fact that PPO rode up, and again, the pullback the first time wouldn't be a surprise. So you come down to zero and then you kick it up. And on that breakout wave, This gets you interested, and then you get the pullback just when people start to lose faith again. And as it comes back and starts to turn up, that's really where we'd like to get on board. Haven't seen that yet on the weekly chart. Okay, gold, this is daily, and what you can just see is a grind sideways. If nothing else, there's some sort of a topping structure here, trying desperately to hold this support level. Relative strength has been declining for 3 or 4 months here. PPO just holding at zero. If it's going to start to turn up now, this is fine. We could understand it. The problem is, relative strength is underperforming. So until it actually starts to outperform, I don't see a lot of institutional money trying to move into something underperforming. Okay, so here's gold weekly, and again we had this up slope here, support resistance trend line, and then we came back down, tested it, and have now pulled back. This pullback here, just consolidating, it could be like this where we actually break down for the next 3 months, or you get the consolidation like this where you get here and then you start to break out to the upside. So don't have an answer yet for us. Is all I know is the momentum is declining on almost every gold related chart, so it's probably a better place to avoid. Scooter ranking tells me that I really don't want to be here. You can see that it got up into this positive area and then really couldn't hold it. And as it started to come back down, it's getting weaker. So if anything, I would say short it, not go long. But again, you're up above zero here, so declining. It comes down to zero and starts to take off. That would be just fine. Anyway, we don't have that yet, so we're still watching. The gold miner ratio compared to gold. So this big downtrend here, trying to break out to the upside. I put this line right against the bottom of all of these tips. There's another line that's in here that's much finer. And watching either one, we just want to see, is it going to actually, where the gold miners are going to start to outperform gold or not? And until they do, I think it's very difficult for us to expect that gold and gold miners go higher. Looking down here, you can see the GDX is sitting right on a horizontal support line. This goes back for almost 2 years at this level, so it's hard to get bearish because there's so much trading that's just sitting here in this level. But if it can't get going, that's a bigger clue for me to be cautious on the golds and on the metals. Okay, gold relative to the S&P 500. So this is one of the charts that makes me have that broader picture about a potential for gold to start setting up. And the reason is we've had improving momentum back here. This is 2015. And then you come down and as you pull back from being up around zero, in this case it actually went below, and then it turned around and it shot up, and the gold miners really took off. What happened before that was gold actually broke its downtrend compared to the S&P 500, rallied up, came back down, got near the lows of where it was before, and then from that point, that was a great point to get on board. Here we have the PPO had broken above zero, comes down, and wants to gently settle down here. It looks more like this area to me. After being up here at support, it wants to break lower. But again, if we got this, we had gold start to break out compared to the S&P, pull back for whatever, half a year, something like that, and then all of a sudden wants to start cranking higher. This would be the place to watch it. Now, this gentle little uptrend on GDX looks like it's breaking right here, so that's uncomfortable. I showed it on the last chart, and again, this 2-year trading range, we're just stuck at the bottom half of it. If we start to break down again here in gold, I think you got to avoid it. So very concerning. Here's silver. Again, it had a weak week where it was it made a higher high and a lower low and closed near the lower end of the range. So outside bar usually not helpful. Sitting on this horizontal support level, again, everything's kind of gently trending down. So it doesn't feel real good that the chart is breaking out or that the chart wants to plummet here, but it doesn't feel like it wants to go higher either. Okay, um, probably enough on that. I think let's just go down and cover off. I'm going to shoot down to lumber. One of the things to point out on lumber, it is now rolled over here, and again, it should be a leading indicator. So if this is going to start to make a base here and turn higher, great. We've been talking about this for a while now. Just let it come back, and if all of a sudden this finds support and we start to see the lumber stocks take off, then this would be a good place to enter. Looking at something like the wood ETF, WOOD. Okay, this chart's basically consolidating sideways. It's right at its 40-week moving average. It's below zero. Last week we had a lot of volume trying to push, but again, price, this momentum below zero is cautionary. We saw this back in 2015, and it just tried to lure everybody in, and then as it did, it rolled back over right at the 40-week. So very difficult, and we have lower relative strength here, trying to base, but again, once starting to at least be watched, but it's not telling me to start buying yet. So paying attention on lumber. Let's just briefly look across the world, because I think, so here's Germany, and it closed unchanged on the week. It was up, did it even close? Yeah, it closed slightly negative. So after breaking out, just consolidating its gains, I don't like it because the PPO is right near zero, so this is a bad place for it to stall. This breakout that we saw in February was one of the reasons I was cautious that we were below zero, but it did manage to go all the way back up to this zero level. Again, the PPO still, the histogram still points higher. It's hard to argue too much with it, but we are right up to this bear market level that I've described a few times. So again, just getting this sort of reaches up to the 60 level and then starts to fail. Okay, the French market was better. Made a higher high and a higher low, so that looks good. Again, you got this RSI right at 60. The PPO for France is well up into the higher levels here. Interesting, you know, the push off the lows here, really nice. And after this big consolidation in here, which was quite a difficult one to trade, in my opinion, because you broke above the 200-day, you got up to resistance, you failed, and now you come back. Now you're right up at this horizontal resistance at 5,500. Canada's at its resistance level. U.S. is at its resistance level. So lots of things to watch. I would say that here's the Dutch market, and it was just doji this week. No real gains. I put the Swedish market on here because I have found that it's probably been a better indicator. The small market can be pushed around, and it's trying to break out to full-time highs here, so that helps me get more bullish. Here is the Shanghai market, and again, talked about, you know, big push last week and then tried higher this week, closed near the low of the bar after a 5-week consolidation. So you kind of consolidate, see if you got any more strength, you push higher, and then you pull back. Pretty important week, I think, to just see if it's directionally got any more strength, and based on the industrial metals, I'm starting to wonder. The Hang Seng, roughly the same chart. Just pushed up, and it didn't close anywhere near this week. It was pretty much flat on the week, but again, more like a doji. No, not even a doji, just closing at the similar level. Markets can pause for a week, nothing wrong with that. The Toyota, or the Toyota, the Nikkei is interesting, and the reason is it's right at its trend line below zero, stuck right here at the 40-week moving average, had a good night overnight here. I'm recording this Monday morning. The Nikkei trying to break out to higher highs here. You know, it's a really important level for this chart. I've talked about it many times, but it's grinding sideways. If it's going to start to break out to the upside, that should be good. I think it was up 200 or 300 points, so it should be over the 2,200 level after the chart updates. Australia, So again, wondering if this was going to break down here, and we saw this make new 1 month lows and then all of a sudden turn around, push higher with a weak bar, and then this week had a better bar that looks like it wants to continue to go higher. So very difficult to call, and again right up against this bear market level, and the PPO right back to kind of where it always rolls over. So hard to want to add at that point. Toronto Stock Exchange pressing up, trying to take out the prior highs. The oil stocks in Canada have been moving up. So while they've started to move up, that's been helpful. But we're right at the 16.5 level, so lots to watch there for the Canadians. And just on the weekly chart, stuck right up against 16.5. All the indications suggest this should be able to break through. The RSI here is trying to get to 70, so that suggests potentially a new bull market. That would be nice to see. But we'll watch, because if the metals aren't going to follow through, I think that's tough. Here's Brazil, and we talked about this as a commodity market a couple of weeks ago that was starting to wane a bit. So it had a new bull market after the bear market signal here, rallied up, and has spent pretty much 3 or 4 months going sideways to down, unlike the US market, which has been pretty much up. And so this is just consolidating here, but look how important this new trend line is that's about a year old. And again, we had a wave below zero here on the PPO, so potential for this wave to be the final high, and then it starts to break down. Don't always see that, but at least be aware of the potential for that to be a major top. Oh, I flew over the Russia market. Let me just show that, because it was a bit bullish actually. Trying to break out above this 4-month zone, a consolidated, or 1 year zone, it consolidated for the last 3 to 4 months, and then started to rally here and it actually closed at fresh new 1-year highs. So that's bullish, and nothing wrong with that. And again, big oil market. Look where this PPO trend line is. If it was going to start to fail, it's right here, but a breakout, pretty important. And again, it's been in a big bull market all the way through here. We've had no bear market indications, and it's sitting right at the 60 level. So I'm cautious after seeing what goes on in Brazil. That chart was weaker, but if these other charts want to keep going, this is pretty bullish setup. Okay, so here's the S&P, and again, breaking out of this downtrend in momentum, one of the reasons it's converting me to be more bullish long term, right at prior highs. So if we paused here, it wouldn't be a surprise, but that wouldn't make the U.S. market look bearish yet. Okay, here's NASDAQ trying to get through prior highs. Anytime you're at prior highs, you just got to be cautious and make sure it can follow through. Here's Greece. And this market just keeps going, so that's a really good look. And on the monthly chart, it looks even better. Here's India, and one of the reasons I just want to talk about that is it's testing its prior high and was unchanged on the week. So just keep watching. There's a big giant downtrend in momentum here coming up against that line now. So let's watch and just see how India performs. Again, some of the best demographics in the world. England. And sitting right here at this major trend line, it's not a great chart either way. It's just really awkward. It's trying to get through its 10-month or 20-month moving average, so center of the Bollinger Bands, which would be bullish. Trying to bounce off zero, that should be bullish. We'll just keep watching with all the Brexit action there. Okay, let's get up and do the banks. I just want to go straight into a candle glance view of the banks. One of the things that's happening here is Bank of America. You can see right at this trend line, really important place. PPO about to go positive. That would be a very nice turn up. Here's Bank of Montreal out of Canada, downtrending momentum right at zero, so an important place. Paribas out of France, trying to make new 4-month highs, so that's bullish. Here's Citigroup, and look at this chart. This is right at the zero level in terms of momentum. So if it was going to keep accelerating from here, this is a beautiful entry. If it stalls right here, and again, you're just above the 40-week moving average. If it was going to stall right here, this is the example we had late September, and then all of a sudden it just started to let go. So we're right here just above the 40-week. Watch it. We're at the PPO 0 level. If this is going to start to break out, these are great places to enter. This is the Commerce Bank in Germany, and again, this chart's trying to improve. Deutsche Bank's chart isn't improving at all. Goldman Sachs broke out above its 40-week moving average, and it looks like after trying to get above this resistance level is doing that. So that's bullish. HSBC looks nice. JP Morgan, that big push. So instead of downtrending, it's actually heading for horizontal resistance and trying to break out to new highs. Morgan Stanley made a nice push as well this week, trying to get to higher highs above the 40-week moving average. PPO turning up, so lots of good indications on that one. Regions Financial, still a smaller bank, but downtrending. The chart's okay. I like the fact that this PPO line might get broken here, and that's usually a pretty good entry. Royal Bank, horizontal resistance or slightly downsloping, getting above 0. Again, if it rolls over right here, who'd be surprised as the price reaches former resistance? If it can break through, that's a pretty important place to be involved. Banco Santander, nice push up here. Just keep watching these Latin American banks if they can start to take off. This one is Spanish, I think. But if you can start to see this banking head higher in emerging markets, that would be helpful. I know Spain is this chart here would say better things. So this is a positive chart. TD got up to its 0 level on the PPO and is just stalled there. It's right at its 40-week moving average, slight down sloping. It was up 0.75% even with the JP Morgan news, downtrending PPO. Again, all of these are very close to breakout levels. If they break out, great. If they fail right here, that's kind of the thing we'd expect. UBS, nothing really bullish on this chart, straight down, barely above the 10-week, but at least it surged off that. And Wells Fargo, even on the good news from JP Morgan, went lower. So it's not a slam dunk, but it does look better for the banks. Okay. So that being said, and I mentioned both Goldman Sachs and Morgan Stanley on that little grouping, we're looking much better. I want to go up here, tap that out. I want to go up here a little bit farther and just find my industrials chart. One of the things, so back in 2018, industrials topped in January, fell apart, rallied back up to this prior high, call it $79, fell apart, and then bounced. And then this week didn't do much, which I'm very surprised at because we got a big push out of the transports. And so let's just go look at the transports right here. They surged above this box area, which was nice to see, and closed right at the high. So really nice push Thursday, Friday to the top side. We're right at the relative strength downtrend, so we're about to see if it's got any more mo to the upside. The airlines, again, pretty much sideways. I don't know if that's investable, not for me. Did make a higher low here, higher low in price as well, but you're right up to kind of where momentum tops out on the airlines. So wouldn't be something I want to add to here. Railroads, I love this chart. This is so good. So after breaking out to the upside, it came back down, tested support, and looks like it wants to take back off. Very bullish. And turning back up in relative strength here. So that has to be bullish. That is so strong. And the thing I want to watch here is momentum has made a lot lower high. So all of a sudden, if this fails, this little push-up fails and it starts to come back, this would be a lot lower momentum, kind of like we saw back in here. And then it just grinds us. So not to belittle the point or whatever, railroads had a nice push on Friday. All of the transports had a nice move. The truckers, this was a push above a downsloping trend line, very bullish. So again, if we start to see that industrials chart break out, we're starting to see all these transports break out. That would be very, very helpful. And again, the rails look great. Here is the autos, and you've got this downtrending 40-week moving average. Doesn't really feel bullish yet. I have one chart up here that's Toyota Motors versus XJY, which is the Japanese yen. What do you see is Toyota Motors basically rallies up. This is over the last 2 weeks, 3 weeks. Toyota Motor rallies up, and while the yen is declining. And if we go down here, what we can see is Toyota Motors is trying to break out above the 200-day moving average, and what we see on XJY is it's just breaking below the 200. And so these charts they're not perfect symmetry, but they suggest that if the yen goes weaker, Toyota Motors is a better place to buy. And again, they're export oriented, so a weaker yen makes them look better, and foreign money coming in would be stronger. So the yen really looked like it wants to break this uptrend, and we're going to find out more this week. But I'd watch, and some of the nice things to own here might be the car maker, the Japanese car maker. So if you look at this period here, 2019, January 1st, all of a sudden this goes on a huge ride. Well, guess what happened? That was right after the yen had shot up and this had dropped. So while the yen went up, this dropped. Then as soon as the yen started falling, this took off to the upside. So if we're going to see a breakdown in the yen, this might be a nice entry right here, right now. Okay, so the autos look good, comfortable with that. The bond market didn't give me a whole bunch of clues this week. I would say this 10-year chart right here, watching to see what goes on as we approach the trend line. So after bouncing up here for 3 or 4 weeks now, let's just see what it wants to do. And again, we had bank earnings on Friday. So this is a pretty important place to be aware of. Anyway, I'm hopeful that this finally gets going and we can make some money on this. Anyway, so that would be interesting to see a big breakout here, or if it just gets to the line and stalls. We don't have the answer for that. As soon as we do, and again, if all of a sudden the bond market renewed its downward push again, that would change my sentiment on the stock market. BlackRock Municipal Fund continues to push into a higher space here, so it doesn't suggest that the bond market's ready to turn around, so that's a concern. Anyway, the one thing that was bullish, that was also bullish, was the junk bonds actually made new 52-week highs here, and again, that's backing out the yield, but they made a new 52-week high. Can't argue with 52-week highs. That's bullish. So the interesting part is if we go back here, you can see new 52-week highs, and shortly after you had this huge spike down. So just to be cautious here as we go, but this is bullish. There's no two steps about it. Just continue to watch it, though. Don't take it as a slam dunk. And then this is the corporate bonds, and one of the things here is it's right up against resistance. Don't know which way this will break. Keep watching it. Again, Paul Tudor Jones said this is one of the places to expect trouble to show up. So until it does, we'll keep watching. There was nothing really in the currencies. They moved sideways. That yen looks like it wants to break down, but hasn't yet. So hopefully that'll be the news this week, that we actually get a move outside the range and can finally see something happening there. The Russell underperformed again last week. So as we started to fall here in, here's the September time frame, Russell made a lower high and then all of a sudden started to weaken. Near the bottom, the Russell started to outperform. Pull back here, Russell started to underperform and the market went soft for a couple of weeks. It's rallied now, and the Russell has not. So I would just continue to say, watch this. I think if the small caps start to fail again this week, that might be a bigger clue, and at least just give us a better entry. On the, I'm going to probably finish here with the breadth industry, or the breadth conditions, and the point I want to make is, the summation index is very high up here. We do have a couple of periods where, it kind of shot up to these high levels and then pulls straight down. We don't have one where it basically soars to new highs, and I guess this 2006 is an interesting one. Soared to new highs, made a lower high, and that was as the market topped out in 2007. That's about the only example I can find where things kind of really break down. This was 6 months later. From these high levels, usually it's pretty good, but we did have some chop in this period in here. Trying to look at the spike levels up around 1200, usually it's pretty bullish. So that from that perspective, I think the summation index did a good job of saying stay long, and I ignored some of that message due to my high-low indicators. But the NASDAQ has the same sort of thing with really high thrust levels. Hard to want to get too bearish. So coming out of the 03 low, you got a really high thrust like that, and that rode on for almost a whole year. So we could just be getting started according to these thrust levels. One of the concerns I have is the actual high lows for the New York stock market just kind of struggling in here, and we saw this back in 2015-16, and when it finally started to surge up around 200, that was a better place to get involved. So even though the stock market was nowhere near breaking out to a higher high, this thing was really pushing a lot of net new highs. Over here, and it could be because of the speed of the drop, this took over a year, and this was a relatively quick 3 months. But we're still in this area that since the January high of 2018, we just haven't been able to assemble a lot of new highs. Now again, you can rally, but the question is, do you have enough momentum to get through to the prior highs? And so this has been one of the charts that I've been watching quite closely because it's been helpful. Now, we probably have to wait until it starts to make lower lows, below zero before we get too concerned. Okay, on the high lows for the NASDAQ, again, this chart, same thing, kind of just dribbling in the area here like it was in 2015. So after this huge move up, I would have expected more net new highs, but we're just not seeing it. So, this chart hasn't updated, so let's just do that. And what we're looking for again is this to break out to the upside, and then that would be more of a big bullish confirmation. I just haven't seen that yet, so that's one of the holdbacks I have that makes me uncomfortable. Lastly, let's look at the advanced decline line. I covered them off on the Market Buzz show last week. So these charts are still pushing higher here. And again, I would use the uptrend now more than whether or not it's hitting higher highs. As long as it continues to trend higher, that's probably better. It's these big breakdown in trends that, if you were trying to be cautious, you want to make sure that as long as this uptrend holds. So in this particular case, we broke the uptrend, jogged sideways, and now we've made kind of a sideways pattern. The real question is, can we keep advancing? So those would be the kind of things that I want to watch for. Lastly, if there's anything that just gives us a momentary pause here, I would say it's the McClellan oscillator. It's just flirting with this zero level now. Doesn't mean we can't go higher. We saw in the New York Composite, we went sideways as it just chopped around zero here. We didn't make a whole bunch of progress through the middle of last year, and right now we're chopping near zero, so we're still positive, which suggests higher. Just be careful if it starts to wane at all. That might be one of the places to look. Okay, so to recap, the banks and brokers look better. Breadth continues to improve, so that's okay. Global markets were okay. Shanghai was a little weak, so that's one of the reasons that the materials were interesting. Thanks for taking the time to join me. Hope you enjoyed it. We'll talk soon. Thanks. Bye-bye.